Inflation peaked. How many months left until we get to deflation? Negative CPI prints in 2023. One thing I've learned from burning in the 2022 flames of inflation is that you need to pay attention to facts and data. Use common sense and trust the charts more than people's words. Except for Michael Burry's words. He maybe is timing it early, but it will happen at the end, according to Michael Burry's latest 2023 prediction. The first half of this year will be a good time to buy TLT for the recession. This year, to me, seems like the end game of this bear market. 2022 set up really good for this bear market. Crashed all retail-related stocks. Crashed the boring bond market unexpectedly. Now that the inflation has finally peaked, how many months do we have left before we hit deflation? How long are we going to have negative CPI prints in 2023? I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? Michael Burry, the hedge fund manager of The Big Short fame, rang the alarm on the greatest speculative bubble of all time in all things in the summer of 2021. He warned the retail investors buying up meme stocks and cryptocurrencies that they were headed towards the mother of all crashes. If only we would have listened and sold it then and just did nothing. Why doing nothing is still the best thing you can do sometimes. Today, the U.S. economy is posed to suffer a recession in 2023, as well as another inflation spike, Michael Burry has said. The investor of The Big Short fame, known for his dire but often accurate predictions, issued the gloomy forecast in a tweet posted Sunday on the first day of 2023 close to midnight. Inflation peaked, but it is not the last peak of this cycle, he said. We are likely to see CPI lower, possibly negative, in 2H 2023, and the U.S. in recession by any definition. Meaning, Burry is the gift that keeps on giving. Now he believes that we will see a negative CPI print on the second half of 2023. That means we will be in a deflation or recession for real during the summer. This time the government has to admit that by any definition, because we will have negative CPI prints. He added, Fed will cut and government will stimulate. And we will have another inflation spike. It's not hard. Inflation surged to a 40-year high of 9.1% in June and remained above 7% in November, well ahead of the U.S. Federal Reserve's 2% target. The central bank reacted by hiking its base interest rate from near zero to more than 4%, and has signaled it will peak above 5% in 2023. Higher interest rates aim to dampen upward pressure on prices by discouraging spending, investing, and hiring. However, they can erode corporate profits and sap economic growth, leading to declines in asset prices and ultimately recession. Burry's view appears to be that inflation will cool and the economy will weaken in 2023, prompting the Fed to cut rates and the government to boost spending in an effort to spur growth, which in turn will drive up demand and prompt inflation to rise again. The Scion Asset Management chief warned back in April 2020 that the post-lockdown reopening the economy could spark higher inflation. He also flagged last year that American households were putting away less money each month, racking up debt, and were on track to virtually exhaust their savings by December, raising the prospect of a slump in consumer spending and a prolonged recession. The S&P 500 index has rebounded strongly from the lockdown crash in the spring of 2020, rising from a low of 2,192 points to around 3,800 points today. However, it could have in value to below 1,900 points over the next few months. Burry tweeted on May 3rd, 2022, how he got 1,900 number. Here it is, his related tweets. A dead cat bounce refers to a temporary rebound in stock prices after a significant fall, often because speculators buy shares to cover their positions. They often occur during major declines in the stock market. Burry said in a May 4th tweet, the implication is that investors shouldn't get their hopes up about any rallies in the coming months, as they're likely to be brief respites that won't result in market recovery. Burry noted that 12 of the 20 largest one-day rallies in the NASDAQ index took place as a dot-com bubble burst, while 9 of the S&P 500's 20 biggest one-day rallies occurred in the aftermath of the Great Crash in 1929. Stocks could stage multiple rallies before the crash is over, Burry warned in a May 5th tweet. He noted that after the dot-com bubble burst, the NASDAQ rallied 16 times by more than 10%, gaining on average 23% each time, on its way to a 78% decline at its nadir. Burry also emphasized that after the Great Crash of 1929, the Dow Jones Index rallied 10 times by more than 10%. Rising by an average of 23% each time, before bottoming at an 89% decline. The U.S. stock market appears to be following the pattern of previous bubbles, leaving it posed for a monumental crash. The Scion chief pointed to the S&P 500's trajectory over the past 10 years, noting it was strikingly similar to the index's chart for the decade leading up to the dot-com crash, and the Dow's chart for the 10 years before the Great Crash of 1929. Burry suggested that human nature was behind the consistently decade-long buildups, and implied that history is repeating itself. Investors can expect stocks to fall a lot further. The investor noted that 5.2 times Microsoft's outstanding shares were traded between the software stock's peak during the dot-com bubble and its bottom in 2002. That figure was 3.3 times during the financial crisis, but had only reached 0.5 times at the end of his tweet. Burry noted it was a similar story with Amazon and JP Morgan, indicating it could be a while before those stocks and others bottom out. When the S&P 500 has crashed in the past, it has traded lower several years later, Burry noted. He pointed to the index bottoming 13% lower in 2009 than it did in 2002, 17% lower in 2002 than it did during the long-term capital management fiasco in 1998, and 10% lower in 1975 than in 1970. If the benchmark index follows that historical pattern, it could trade 15% lower than its level in the spring of 2020, Burry said. That's how he gets 1900 number. When we get to S&P 500 close to 2000 or even 1900, we will know that negative CPI prints are here. I believe by June of 2023, we will reach the bottom of this bear market in stocks. The Fed will drop rates to 0. And TLT will go to 190. Of course, how many months we will get negative CPI print will depend on how much the Fed's willing to stimulate the economy again. Still, this is not trading advice. If you want to become an author, I can help you with that. This is my collaboration book. It's already yours. Adversity Equals Success. Such an amazing book with such incredible authors. And my book time. You are such a good boy for watching my video right till the end. Bye.